This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Hello, this is Hall Martin with Investor Connect. Today we're here with Sarah Jennings, Director at Beyond Angel Network and Fund. Sarah, thank you for joining us again.
Yeah, Hall, thanks for having me. Happy to be back.
Well, great. Well, we had a previous interview in which you talked about your network and fund. Can you give us a short update about what you've been doing since our last interview?
Yeah, absolutely. So we've had a lot happening since last year. So happy to go through and give kind of a high level overview. So first off, with our network, we continue to grow. We're now up to about 32 angels in 15 different states in Europe, which is really exciting. We've added 7 more portfolio companies since we last spoke as well. And then, of course, with the pandemic, we were virtual all year, but we just recently started going to face-to-face regional meetings, which has been really exciting. So we had one last month, and then we're having one in Dallas on October 28th. So we're really excited about that. Listeners can find out more information about that event on our website, on our events page. And then what we're also really excited about is that we're going to kind of kick off next year with one in Florida for all of our investors, both network and fund, not just the local regional area, but anyone can come. And what's kind of special about the Florida one is we're going to invite all of our portfolio company CEOs to come to that event, be able to share kind of a live progress update on their companies, and also give all the investors an opportunity to get to kind of interact face to face since our pitch meetings have been virtual. So we're really excited about that. That's going to be a lot of fun. Mm-hmm. As you know, with our network and our fund, kind of one of our unique aspects is how we try to provide and really seek to provide education opportunities, not just for our investors, in venture capital and angel investing, but also for college students. So we've had kind of our main internship program, our venture capital analyst internship program for a couple of years now. And this year we launched 3 more programs. So we have a venture marketing program, we have a fund administration analyst program, and then we have a venture associate one. That's the newest one we just released. So it's been going really well. It's fun just to see the team continue to grow and build. So we're excited about that. And then to also support our educational goals on the membership side, we just launched a new membership option as well too. So we're calling this our sponsoring angels. And this is really geared for people who are non-accredited, who can't invest yet, but who want to learn about the space. They want to learn about venture. They want to learn about angel investing. So once they hit that accredited investor status, they feel knowledgeable enough to make these decisions. And so for our sponsoring angels, we'll provide not only educational materials, but they'll have the opportunity, of course, to just come alongside our angels and learn with them, attend our quarterly meetings, our regional meetings, obviously network with individuals in their different spaces. And then why it's called sponsoring angels is because we're actually going to allow these sponsoring angels to nominate specific students for internship consideration. So our angels really like that part of us about how we are impacting the next kind of generation of, VCs and angel investors. And so the fact that they get to kind of actually impact maybe a student they know well, they really like that as well too. So they can nominate a student for, internship consideration from any university, anywhere, which is really exciting. So that's something we have coming up or just launched. We officially launched our fund since we last spoke. We were in that pre-launch phase last year. And so that's been really exciting. It's seeded. Has a growing portfolio. It will be closing here at the end of the year. So we have just a few more months left for, investors to have the opportunity to get in. It's doing really well. We're excited about that. We're excited because we're going to actually be making our first distribution to fund members here at the end of the year. So we're excited about that. It's been a good year, and I've probably missed 1 or 2 things, I'm sure, but I think that's hit some of the highlights of what all's happened so far year to date.
Well, that's great. Sounds like things are going well, and you're already having distributions, so it sounds like it's going very well. But thank you for the update on that. And sound like things are really cooking along at this point. So, let's talk about your investing experience over these past few years. What company do you regret not investing in, and why didn't you invest at the time?
It's a great question. So I'm going to do a spin a little bit on this question and specifically say a company that I regret the fund not getting into specifically. So we had a company that came through our channels end of last year. We're really excited about it. Our network angels were able to get in on it. This company was called Soteria. They're in the renewable kind of battery market, doing obviously it's very hot right now, doing really well. And we got great terms in their Series A. Keiretsu was the lead investor. So, a great term sheet. And the company's been doing really well. And I really regret the fund. The fund wasn't able to get in on the action. And the reason why we didn't get in at the time was, we were in that launch period and we just couldn't deploy capital yet. And so it was a little sickening now that we've tracked it, like, oh wow, really wish we were able to get in back then. But I know we're obviously keeping an eye on it as we're, network investors in it. And, we'll see if we get in on the action in a subsequent round. But we're excited about that one. And obviously with tracking with that company specifically, excited just about that kind of subsector too.
Great. So, in general, what sector are you passionate about and why?
So, like I said, we definitely, well, first off, we like anything tech. So, I'm sure that's not a groundbreaking statement to make on here, but we really specifically like deep tech, is what we've kind of found we're really drawn to. So, of course, things like I just mentioned, like these, renewable battery, really like, VR, AR, XR, et cetera. Those are all things that we're really kind of interested in and pursuing. For us, we really like it just because we like the scalability of tech. We like the growth outlooks for both, broader just market of technology, but also for these specific kind of subsectors. And then also, of course, like kind of the average returns that, one can kind of expect from tech as well.
Great. And are there any particular sectors you've avoided and why so?
So even though we have a preference towards tech, we do invest kind of across industries. I will say one thing that we do tend to avoid are sectors that are really highly regulated. So, things like biotech, there's just so many different kind of hurdles they have to get past before they're really a really, really viable company with all the FDA approvals and all that. So we tend to steer clear of those. But other than that, we typically kind of will look at anything.
Well, great. And so, what's your worst experience with a startup?
Ooh, okay. So worst. We've been blessed to not have too many bad experiences. I have to say, we're very lucky. So maybe I need to go knock on some wood or something now. And hope I didn't just jinx myself. But thinking about this, we had one company we worked with, and they were just very difficult. Post pitch, it was just a difficult process. I think for everyone involved, for our team, and as well as for investors who were interested in investing. They were pretty inflexible, and so that wasn't a great experience. But like I said, I think for the most part, we've been blessed with getting to work with some really great founders and companies, and so I can't really complain too much about that.
Great. And what was your best experience with the startup?
Ooh, okay. It's hard to choose one. We've had a lot of those, to be honest. I feel like I'm bragging, but I have to brag on our companies because they're just great. But I think some of the most rewarding and best experiences that we've had for our group and for me specifically is whenever we've had the chance to advocate for our portfolio companies, maybe, as they continue to raise that round and close that round, as we talk with other, groups that we kind of share deal flow with. And also whenever they've had the opportunity to kind of vouch for us and getting to speak with other startups that they know and kind of vouch for us and our process. So I think there's nothing better than a really great investor startup, partnership that's, mutually beneficial to both parties. And so we've had quite a few of those and it's been a blast. So I do have to brag on our companies and our founders quite a bit.
Great. Well, what are the main challenges the startups you work with face today, aside from fundraising? What do you find is the biggest issue?
Yeah, so I think both for us, first, kind of if I can hit the investor side a little bit and circle back around to the entrepreneurs, I think a challenge always is finding quality deal flow, right? There's a lot of startups out there. There really are a lot, but it's trying to find the high caliber ones that's the trick. So I think that's always, a challenge that we have to deal with in the industry. I think then with you add the rise of things like impact investing, and then all the different subcategories of impact investing. I think it shows that investors are feeling the struggle of finding investment opportunities that align with, the things that they really are interested in and their values, their convictions, what they're most passionate about. And I think the same is true on the other side for entrepreneurs. I think from our experience, the more and more people we meet with, founders face a challenge of finding capital that aligns with the vision and mission and values of their company. And so this is an issue that we really are trying to solve, at the core of our network, our fund, and what we do. Both our mission and our investment thesis is centered around, providing, we say values aligned capital to our portfolio companies. And everyone always talks about how, investors need companies that are a good fit for them. But it's a two-way street, and companies need investors that are a good fit for them too. And capital has so much influence on, early stage companies and the direction of that startup. I think it's really important for these entrepreneurs. So in order for a company to be able to scale and grow and really truly flourish, I think it's really important that both investors and entrepreneurs are, aligned on the direction, the vision, the core values of the company for it to be a success for both parts. And I think that's what's kind of a challenge that we've seen increasingly as this becomes more and more popular. Is, more and more founders are looking for capital that lines up with their company, and investors are looking for opportunities that line up with, their interests and their passions.
Great. And so you talked about several application sectors a few moments ago. If you had to pick one or two that you think are really good opportunities to pursue today, what would you call out?
Okay, so again, I'm going to keep on circling back to these two I'm talking about because they are really interesting and things that we're really pursuing right now. So kind of going back to the whole like renewable, like the battery and all that kind of market or subsector. What's crazy is that companies right now with this type of technology are IPOing with zero revenue, which is like insane. And so I think it's really interesting to see this subsector really taking off. I think it was PitchBook, if I recall correctly. It was a recent sector report was done. I think it was by PitchBook, and they were saying that specifically the renewable battery market was expected to grow from, I think it was 2 billion this year to like over 27 billion by the end of the decade. So really high growth rate, and we're certainly seeing that as we just track a few different companies in that in our own portfolio. And like I said, we're also really interested in companies like VR, AR, XR types of technology. And we've seen that market kind of really grow. We have a couple of companies, one of which we invested in that we've been tracking for a couple of years before we even invested. And so we've kind of seen along the last 12 to 18 months how much that sector has really grown as well too.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, as always, Paul, you covered everything really well. I think I would just say to listeners, I know that venture can seem scary and it can seem a little intimidating, but it doesn't have to be. And so I think my advice to anyone new to angel investing or thinking about getting into angel investing would be, get plugged in with a group of other angels that you can learn alongside and that can kind of help with the heavy workload of diligence. I appreciate everything you do, Hall, to help others get connected in different groups and providing, resources for them as well too. So love what you guys do at 10 Capital. And as I kind of alluded to earlier, we really have become a national angel group and fund. And we've got options to participate both, virtually and in person, and options to invest actively and passively. And so we'd love to have listeners, join our community as well. We have quarterly pitch meetings. And then, of course, like I mentioned, we have our regional meetings as well too. And of course, we've got options now both for our accredited investors to invest through the network or the fund, or for non-accredited investors to join our community and learn kind of VC and learn angel investing as well. We have upcoming meetings, like I said, Dallas and Florida are on the calendar, as well as a few others. So would love to see some faces there. And then we have our Q4 pitch meeting on October 15th. So that's just around the corner. I think one of the things that really differentiates us is how quickly we move. And so, we have an efficient process to get from point A to point B with the vetting and screening, and still do it in very thoroughly, but it is an efficient manner that we do these things. And so once a company pitches to our investors within 30 days, we've written checks and invested as well, which I think our companies like quite a bit. So we're already accepting applications for our Q1 pitch meeting, which will be February 4th. So for any entrepreneurs listening, I'd say We'd love to have you apply. You can find out more about us, our process, and our application on our website. And then for any angels, you can find out more about our different ways you can get involved on our website as well too.
That's great. Well, appreciate your joining us today and hope to have you back for a follow-up soon.
Yeah, thank you, Hall. Thanks for all you're doing. This is a lot of fun.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.